Hi, this is Nicholas Vardy of the Oxford Club, and welcome to my new video series called Buy or Buy. In the financial media, we all know that hyperbole is king. You often see reports of what's the best stock to buy or what's the worst stock to avoid. But what's the real truth behind the hype? In each of these videos, I'll be taking a look at a single stock, popping the hood, and letting you know whether you should buy later, or buy never. Today, I want to take a look at Tesla, which recently announced its Q3 deliveries. This also offers a hint of what's to come when it announces earnings later this month. Last week, Tesla announced that it delivered 241,300 electrical vehicles worldwide in Q3. Now, that actually beat Wall Street's estimates of 227,000. That means that so far this year, Tesla has sold around 627,300 vehicles. Now, that puts it soundly on pace to beat last year's total of 499,550. Now, analysts now expect Tesla's deliveries to hit at least 865,000 by the end of the year. The most bullish case puts this number at 900,000. Now, Tesla will report Q3 results later this month, and analysts expect earnings of between $1.68 per share and $1.95 per share. Now, all this sounds very bullish, and the stock has rallied on this, quote, unexpectedly good news. Actually, I really don't think it's that great news for Tesla at all. Go back just 6 months, and these very same analysts were predicting that Tesla would sell 1 million vehicles in 2021. Whatever happened to those predictions? They just kind of completely disappeared. And this really highlights an aspect of Tesla's culture which bothers me personally. They always overpromise and they underdeliver. But I think Tesla has even more challenges ahead. First among them is competition. Now, Americans tend to think that Tesla is the only EV manufacturer out there. But the reality is there are many EV manufacturers and they are catching up to Tesla. Now, people like to compare Apple to Tesla, but the reality is Tesla does not control the market the way Apple does. Apple owns and controls the Mac and iPhone operating systems, which locks in its consumers. Tesla does not have that luxury. If you want to see the future of what the electrical vehicle market looks like, look to Europe. And there, despite Tesla being the single best-selling model on the European continent this year, overall, VW, a company that Americans never even bother talking about, has taken on the mantle of leadership and is the number one manufacturer of EV vehicles in Europe. Then there is the issue of China. Tesla has bet big on China. However, Tesla's interest has not been really reciprocated by the Chinese. In fact, it has become the subject of a lot of regulatory crackdowns and even recalls. In fact, Beijing has even banned the use of Tesla electrical vehicles by state and military personnel. These are not good signs. Why is this bad news? China is known for promoting its domestic champions over Silicon Valley rivals. That's why you don't have Google in China. That's why you don't have Facebook in China. It's hard to imagine that the Chinese are going to make an exception for Tesla in this regard. The real challenge for Tesla, I think, however, in addition to these strategic ones, is its valuation. And this is from purely an investment standpoint. Tesla today has a market cap of $780 billion. Its PE ratio is 412. Yet this company, with this valuation, sells less than 1 million cars per year. By way of comparison, GM has 1/10 the market cap of Tesla and a PE of just over 6. And how many vehicles does GM expect to sell in 2021? Well over 15 million. And by the way, GM is not an anachronistic industrial age dinosaur. It has actually promised to go all electric by 2035. In my view, Tesla's valuation today is nothing short of silly. The only sillier thing is the mental gymnastics that Wall Street analysts go to justify its ridiculous valuation. One thing about investing is that it's always hard to argue about price or argue against price. And that was the reason Tesla was doing so well up until this year. In 2020, Tesla gained 700%. There was a single trading day in November when Tesla's gain was more than the market cap of General Motors in its entirety. And now 2021 has been tougher. After its recent recovery, Tesla is now up about 10%. It's actually trailing the S&P 500 in 2021. And here's a chart you won't see very often. This compares the price performance of GM and Tesla year to date. And what you see is that GM has returned almost 70% so far in 2021, while Tesla has barely broken into double digits. In sum, I think Elon Musk is a smart guy. I think Tesla is a cutting-edge company. And like Apple, Tesla does have a cult-like following. But to grow into its valuation, Tesla would have to achieve record-breaking growth and unprecedented margins in an increasingly competitive environment. It may do that, but it's not a bet that any rational investor would make. Overall, I wouldn't touch Tesla with a barge pole. It's not a stock I'd recommend for any long-term investor. I hope you enjoyed this episode of Buy or Buy. If so, please hit the like button below. I want to remind you that these recommendations are not actively tracked in any model portfolio. If you want to follow any of my buys and sells, size your position accordingly, set a trailing stop, and never bet more than you can afford to lose. And if you want more financial insights on stocks, trends, or money in general, make sure you sign up on libertythroughwealth.com, a free e-letter I write at the link below. Thanks for watching and see you next time on Buy or Buy.